Ladies and gentlemen, hello. This is Christopher Aaron. It is September 26, 2019, and welcome. This is going to be a special video. This is going to be a presentation on how to construct a precious metals portfolio. And I'm taking this information from having worked with hundreds of investors over the last several years. This is what I do. There are two primary things that I do. One is to publish the research that we use here, and the other thing is to work with individuals. Just to let you know, I do work with individuals. And so in this video, we are going to look at some of the lessons that I've learned, how this can apply to you, how you might consider changing your strategy versus different risks and rewards, and much, much more. I just briefly have to show the legal disclaimer, just to say up front, I am not a licensed financial planner. Oh no. I'm an independent precious metal strategist. Why? Because there is no one licensed who understands the precious metals markets. And that's why I started this business, to provide an unbiased look at the precious metals world from someone who does not sell the metals. That is what I'm here to do. Simply look out for the best interest of our clients. So let's talk about this, some various considerations. This is going to apply if you are new to the precious metals, but also if you have some experience already, a couple years under your belt, and you're looking to understand some of the different types of investments that can happen in this world. Before we do that, let's look at the prices of gold and silver here over the last 3 days. Now, this was Wednesday, strong down day on Wednesday. They sure hit the metals, didn't they, on this day on Wednesday. Now, we're holding above that key support. Remember, we were talking about that last week. That 1484 level on the spot market is still holding. So thus far, this is still just a consolidation dating back until August. Now, silver got hit really hard. I mean, this is, we're talking 20-cent bars here on the y-axis. That's almost a 4% down move in one day. Still, I would say if silver can hold above 1740, this market's looking really good to continue consolidating and round back up later this month into October. So I would say everything looks good, and even if this market gives us one more final dip, I actually think this is one of those few times where I'm willing to say I think this is going to be a buying opportunity, because there are a lot of signals that I'm looking at. Now, I don't think you should buy every single day, every single month, every single year. I think there are times to sell. I just happen to think that from a risk to rewards perspective, we're looking at a good opportunity here in the silver market over the next several weeks. Let's get into the main topic for this. How to construct a precious metals portfolio. Let's look at various options for this. Now, we have to make some assumptions, right? Assumptions have to be made. I can't speak to every single individual out there, but let's look at some averages, some median figures here for assumptions. Let's assume you are 45 years old and you have $50,000 to invest. Now, we're taking our sort of generic client profile here, and if you fit outside of this profile, I know we have plenty of people from all across the world, across the spectrum. I'm not forgetting about you, but let's take this assumption for a minute. You can always add a zero to this or subtract a zero from this if your situation is different as far as the amount looking to invest. Let us assume that you have a stable source of income. Now, this is actually really important. I work with a number of people who some have that stable source of income, and so we can look at this portfolio amount as something that they are willing to risk, right? But if this is not true, if you do not have a stable source of income and you're sitting on a pile of cash like this, you are in a different position. And I would tell you, you should most likely look at improving this here so that you can risk this capital, okay? I think that's very important. Let's look about the goals for someone that fits this profile. So we're talking about growth. First of all, they want to grow this amount. They want moderate leverage to the precious metals prices. So what am I talking about with leverage? We're talking about if the price of gold goes up 10%, how can they try to make even more than 10% on that. That's what we're talking about with leverage, and I'll show you how this works in the next couple of slides. They are also typically looking, someone like this, I would say, is looking for a disaster hedge. Now, here you really have to think about who you are and what you actually think is going to happen in the world. You have to be really honest with yourself. This is a theme that we'll touch on a number of times. But do you think that over the next 5 to 10 years, there is going to be a stock market crash? Or there is going to be a breakdown in the banking system where you would need some of these funds on you, near you, somewhere secure? Is that something that you think is going to happen? Or do you think this could be like the 1970s where gold went up 2,000%, but you know what? Armageddon never happened in the 1970s. That was 2,000%. And silver went up more than that. So we don't need the world to blow up. We don't need civilization to stop for the precious metals to perform phenomenally, okay? So you have to think about these things for yourself, and then your risk tolerance. How much of this are you willing to risk? At what point do you say, I can't handle this volatility? You have to think of some scenarios. Imagine if this 50,000 fell to 40,000. How would you feel? Would you lose any sleep or not? What if it went to 25,000? Would that cause you distress? You have to be very, very honest with yourself. And I like to pull up this picture here every once in a while. Of course, we are looking at the Apollo temple at Delphi. And the famous quote that is inscribed literally on this temple is simply, know thyself. And so we're talking about that here with knowing your own risk tolerance, your own goals. Where are you brutally honest in your life? And once you have those things down, we can take those assumptions, we can put them in the corner, and then we can talk about constructing a precious metals portfolio that fits you. So we're going to use this example. And here we talk about the precious metals pyramid. What is this pyramid? Now, I'm going to divide this into 3 sections. And these are the 3 major categories that I believe you should consider if you are just thinking about the precious metals now for the first time, or if you're only in one of these categories and it's time perhaps to increase the amount of risk or increase your growth potential. I think you should think about this. So what am I talking about? On the bottom, core holdings, physical, gold, and silver. We're talking about the hard stuff, the stuff you can hold, the stuff you can keep at your house or in a safety vault or offshore if you want to. Core holdings, very important to consider. How much of your portfolio is going to be in a core holding situation? Second major category. Okay, precious metals mining equities. These are the companies that are digging the metal out of the ground. They're literally digging it out, and there are reasons to consider investing in this sector through individual stocks or the ETFs and or warrants that you can get by investing in these stocks. There are reasons to consider this, which have to do with the amount of leverage that you can get to the metals prices. We will look at this topic coming up. The third category that you should consider, this is not for everyone, but is a trading account, a separate trading account, where you trade some of the swings. As gold moves higher, you try to capture a move higher. As it moves lower, you try to capture a move lower. And you can do this through ETFs, options, or futures. Contracts for delivery also, I know they use those a lot in Australia and New Zealand and Great Britain. So there's lots of different options. We call this paper trading. And if there's one thing that I can say first off the bat, when you're looking at this pyramid and these different groups here, you should consider these 3 things completely separate strategies. These should be kept in separate accounts, separate strategies, no overlap at all. So, for example, you might have a long-term holding in physical gold and silver. You might have some intermediate term individual stocks that you own, and you think the metals are going higher. But at the same time, you might have a separate trading account where you're betting that the metal is going to fall in price, and you're looking to profit from that. And then we'll talk about some of the strategies for this, taking some of those profits and investing into these two more significant portions here. This is the precious metals pyramid. This is how I would say the average, if I could say an average client that we have here, this is how the average client should generally, of course, I'm not considering your individual situation here, but should generally think about constructing a precious metals portfolio. Again, I can't tell you what to do. I can only tell you how we do things here, what our clients have done in the past, and how as an independent strategist, I look to balance the more reward, more risk with the less reward and less risk in this sector. Okay, so that's what we're talking about here. Now, how would I divide this? Let's talk about this, an actual real world scenario here. How would I divide this? For someone with $50,000 to invest, my recommendation for this average person would be to put 50% of that into their core holdings, into physical gold and silver. So that's $25,000. Another 30% or $15,000 would be in the precious metals mining equities. We're talking about the stocks and the ETFs and hopefully picking up some warrants there. So you can see what we're doing. We're getting a smaller percentage as we work our way toward the higher risk end of the spectrum, right? And then the last portion, let's call it 20% or $10,000, you would use this to trade the swings in both directions, okay? Some being $50,000. So less exposure, generally speaking, unless you are a full-time trader, generally less exposure as we get to the top, more exposure at the core holdings segment. Now, this is very important. Let's talk about the core holdings. How would you actually do this? Talking about the physical metal. And by the way, I don't usually show that much of my holdings here in my stack, but I wanted to in this upper picture here. We're looking at very interesting juxtaposition here, right? This is the first silver eagle that I ever received. It was in 1987. I got it as a gift from my father, and I still have it. Okay, so first one I ever got, that's a 1 ounce American silver eagle, 1 ounce of silver. And this is something that I actually inherited recently. This is the kilogram year of the dog Boolean round. That's the kilogram round out of Australia. Excuse me, the kilogram coin. It's an official government coin. A whole kilo of silver. And I love this one. So you can see the difference in the size right there. So this is a big, this takes up your whole hand pretty much if you're holding it. And that's the 1 ounce comparison right there. So I just thought I'd show you, we talk a lot about the mining equities here, but I also do have a physical core holding. I practice what I preach, and we're going to talk about all 3 different segments here in this video. Let's talk about it. So core holding. We're talking about that 50% or $25,000. Let's consider some questions that one should take into account and then hypothetical answers. Again, I have to put this word hypothetical because we're talking about that profile of that person, that 45-year-old person with $50,000 to invest. And so your answers will be slightly different. But what percentage of gold versus silver do we talk about for someone who's going to have 50% in a core holding? What makes sense? Well, you know what? For someone like that, I'll tell you what I think makes sense. 50% in gold, which is $12,500, which roughly buys you 8 ounces of gold at the current spot price of about $1,500. And yes, you're going to get slightly less because you have to pay the premiums on the coin. But we're rounding it off here. So 50% of that into gold and 50% in silver gets you 700 ounces of silver. Okay, so you can see the difference there in the current value of these two metals. Now, could this percentage be different? Yes. If your risk tolerance is less, in other words, you want more stability, you would overweight gold. You could do 66% and 33%, for example. If you have a higher risk tolerance, because silver, I think, in the long run has more potential for gains, although over the short and even the intermediate run, even a number of years, silver can massively underperform. And so you really have to think about what is your purpose for this here, for these funds. If you have a high risk tolerance, again, if you're younger or you're really trying to hit more of a home run, I would say silver is more of a way to go. But I will tell you one thing, there's another consideration. Think about the weight, think about the bulk, okay? It is extremely easy. Talk about 8 ounces. We could talk about a roll of gold coins. Let's talk about 20 or 25 ounces of gold, right? $40,000 to $50,000 of value. It is very easy to put a little roll of gold coins in your bag or your purse or your backpack and get on a bus somewhere and go anywhere you want in the world. It's completely legal. You're under the amount that needs to be declared through customs. Very easy to do that. Almost impossible to do it with silver. And furthermore, I want to tell you one other thing. There is a precedent, even in a hyperinflationary environment, for gold to outperform silver. In the Weimar Republic in Germany in the 1920s, I have read detailed books on this period. Everything that happened, we're talking after World War I and before the rise of Hitler. As Germany was experiencing its hyperinflation and prices were going through the roof, you've seen the pictures, they printed money out of thin air. Money was used as kindling because it was so cheap. In that period, gold actually outperformed silver, which is the opposite of what the inflationists typically believe, that silver is going to outperform. Why is that? Because the market put a premium on that portability. It was so important, if you think about it, if you really think there's going to be a disaster or something like that, I'm not saying I think there is. I'm just saying if you believe that, there may be merit to the idea that gold should have a premium over silver. Just consider that, okay? So here is a sample breakdown of what I think the average person looking to have some nice leverage, but some portability at the same time would consider. Now, other things to think about. Where do you store this gold and especially the silver? Do you store it at home? Is your home secure? Are you in a safe neighborhood? Do you have roommates? Do you trust your roommates? Do you trust your spouse? We have to ask questions like this. They might not be comfortable questions to ask, but we have to be brutally honest. Again, getting back to that know yourself thing. What about a safety deposit box? That's nice, but what if the bank goes under? What about an offshore vault? There are many good offshore services out there. They charge storage fees, which you do not have to pay if you keep your bullion at home. But then again, if you're talking a large amount of the metal, doesn't it make sense to diversify your holdings to moving some of that offshore? And in the future, by the way, I will do follow-up videos where we will talk about each one of these possibilities, the pros and cons of all these. Right now, we're going through a high-level overview of the various possibilities that you should consider as a new or perhaps a diversifying precious metals investor. Finally, other options, ETFs, exchange-traded funds. And I'll just tell you, even though, yes, these are held on a stock exchange, the ETFs, some of them do own fully allocated bullion, and there are tax considerations that make holding ETFs better than holding your metals in an offshore vault, especially if you're in the United States. You can qualify for the 15% long-term capital gains bracket for some of the ETFs. Only some of them, though. Be very careful. The GLD and the SLV do not qualify, whereas some of the closed-end funds, such as FIZ or PSLV, do qualify. Whereas in the offshore vault, you will pay, when you sell, you will pay 28% capital gains. It doesn't matter how long you've held it. Precious metals are considered a collectible in this country. So these are all things to consider. If I went too fast for you with any of that stuff, we can get more into that in a future time. I'm talking high-level topics to consider here. There is a lot to consider. This is a really important topic. We're talking about your safety. We're talking about your wealth. We're talking about your future. We shouldn't gloss over this stuff. When to invest, Okay, here's another big question. So let's say you're talking about $25,000. And again, as I said before, if your situation requires you to chop a zero off this because you have $2,500, that's fine. I work with investors like that too. There's no too small place to start. And if you need to add a zero or two zeros to this, we work with investors like that too. Different strategies, of course. When to invest? How would you do something like this? You know, this practice of dollar cost averaging makes a lot of sense right now, especially. We've had a strong run in the precious metals here, especially just over the last 3 months. Gold is up by almost $300 in the last 3 or 4 months. Nothing moves in a straight line. And if it does, trust me, it will move back in the opposite direction just as quickly as it moved higher. So if you were talking about 25,000 and you're looking to invest that, I would urge you to consider dollar cost averaging. Perhaps $5,000 on October 1st, $5,000 on November 1st, $5,000 on December 1st, etc., etc. Split between gold and silver if this is the proportion that you are talking about. Okay? So these are all high-level considerations to think about with your core holdings, and just know if you're lost at this point or if some of these things are unclear to you, I am here to help. I do not work for any of these dealerships. I do not work for any of these funds or any of the vault places or any of the banks. I don't work for any of them. The reason this is called iGold Advisor, the I is for independent, okay? I am independent here. I'm happy to help. I try to help as many people as I can. I try to answer some of the questions here in the comments, but as you can probably imagine, it's impossible to answer all the questions through this and through email. That's why I do work with clients on an individual basis. So the final other question. Now, we don't talk about this a whole lot. This is kind of glossed over. You know, when you look at a lot of the other sources of information, people are talking about buy, buy, buy. Now's the time to buy, right? Silver prices are low. Yeah, but when do you sell? When do you sell? And here's where I have, I think, a different take on this than what you will hear elsewhere. I consider my core holdings in precious metals, and you see two of my coins right here. I consider my precious metals physical form to be a savings account. This is how I save. This is how I crystallize wealth when I want to set wealth aside. This is what I do. So when do I sell my precious metals? When I have another use for it. That could be buying a piece of property. That could be investing in my business. That could be helping someone out. So I liquidate some of my money to pay for something that I need to. That's how I do it. Now, do I try to time it as best as I can? Yes, I certainly do. But if the price of gold had moved down a little bit and I have a use for my savings, I have no problem selling it. I consider my core holdings to be a long-term savings account. If you think about it this way, I think it really helps you feel good about crystallizing your wealth. Let's move on. Let's move on to this next major topic, the second big topic. We are going to talk about precious metals mining equities. And we're talking about that 30%, that $15,000. We're talking about looking at wanting to get some leverage from here. Why? Again, leverage. Why are we going into this? And so what do I mean by leverage? Let's just look at an example. This is the best way to show it. Okay. Here we are looking at the move in 2016. This is when gold moved. It bottomed in late 2015 into the beginning of 2016. So we're looking at the turn of the year right here, 2016, where my mouse is. And we saw gold rise from 1050 up to 1375. Using round numbers, this is approximately a 30% move in the price of gold. Not bad at all, especially because gold had been falling for the previous 4 years, 4.5 years. So a 30% gain in the first half of 2016 was nice. Aha. Now, take a look. So the exact same time here. Take a look at what happened to the Senior Gold Miners Fund. This is an ETF, the GDX. The GDX was up 200% at the same time that gold was up only 30%. Now, This happened at exactly the same time. A dollar is a dollar. There is some discussion to be had here for having exposure to the gold miners, I believe, if you can get leverage like this. And the other thing is, look, I don't know too many people who had to sell their gold because they had to flee the country because there was riots in the streets or anything like this in 2016. So certainly you were safe having funds in the gold miners. Now maybe something changes in the future. I do believe there's merit to having a small portion of your metals easily accessible in physical form for that disaster hedge. I do believe that. But look at that leverage. Now, let's move one step further. For full disclosure, this is a company that I own right now. It's called Spanish Mountain Gold. This is a small junior gold mining company in British Columbia, Canada. They're sitting on literally a mountain of gold. It's about 4 million ounces in their total resource, and they're nowhere near getting ready to produce it, which is why this company sees so much leverage in a move like that. So if you can see here, this chart went from 2 cents up to above 20 cents. That is a 1,000% gain. If you had been buying back here in the 2-cent range and then selling at 20 or above, 1,000% gain at the same time that gold moved 30%. So, excuse me if I say I am interested in trying to identify companies that will move like this again. And trust me, all you need is 1 or 2 moves like this to dramatically change the course of your life and your portfolio for years to come. You don't need to have this on every single company that you own, and you don't need to have this every single year. But you get one of these every couple of years, trust me, things are looking good. So this is why we consider the precious metals equities for the leverage to the metal itself. Now, for full disclosure, this is in a rising market. Let's look at the downside. For every positive, in this sense anyway, in finance, there has to be a risk to it. So let's look at the exact same gold, the GDX, and Spanish Mountain, one on top of the other, during a declining period. From 2011 to 2015, we talked about this, gold fell by 45%, right? In real dollar terms. So you lost almost half your value if you were holding onto physical gold. What if you were holding onto the GDX Senior Gold Miners Fund? 80%, extremely volatile, right? I know a lot of people who were completely wiped out during this move. What if you were in Spanish Mountain Gold? Down a cool 94%, okay? And this is one of the companies that survived. Many of these smaller companies went bankrupt, so down 100% during this period. Spanish Mountain survived, and then it had that 1,000% gain off the bottom, which is why I think it's a good example to look at this in both directions. Bottom line, we hope we're not going to have a period like that. We hope we have more gains ahead of us here. This is something that you should consider, I believe, for a portion of your precious metals portfolio. Maybe not the entire amount, but a portion. Leverage. So let us talk about how to go about constructing that and some of the pros and cons of different ways to do that. Now, for the record, I am not necessarily saying that I think you should put all your money into either the GDX or Spanish Mountain. I think you should own a portfolio of these companies. It's very important to have diversification. So the big question about this, about the best way to go about doing it, is, again, being very honest with oneself. How much time are you willing to devote to the initial and the recurring research that goes into identifying these companies and then monitoring them? There are over 1,000, and I think it's approaching 2,000, precious metals related mining companies that are publicly listed in the world. Okay, approaching 2,000. That's a lot of stocks to sort out. For each stock that you choose to buy, I think you should dedicate 1 hour per week to staying up to date with what is happening with that company. So what does this kind of research look like? I will give you an example. Do you understand the mining business? Do you know what they are talking about here in these news releases? When they're talking about ore grade, when they're talking about how long the intercept was, that they intersected mineralization, when they talk about the permitting process for getting these mines online, do you know what they're talking about with this? Finally, when will you take your profits or cut your losses? If you're on one of those companies, I have dealt with people like this who refused to ever cut a loss. And you know what? I've had some people who I know who invested 100% of their life savings in one particular gold mining company, and that company went bankrupt. Not what you want to do. There is a time to cut your losses and a time to take profits. So do you know how to do all of this? This is the type of research that we have done here on Spanish Mountain Gold. This is the type of report that goes out to our premium subscribers for each of the 10 gold and silver miners that we are investing in here. And we update this every single week. Every time news comes out, we update it. And once every 6 months, we fully update the comprehensive report that you see here. So are you willing to do research like that, or are you just throwing darts on a board? I think you really need to be honest with yourself. It does take quite a bit of work to dive into understanding this. And even I am not a geologist myself, so I refer to other associates who know how to interpret things myself, and then I compile that research and put it all together in a form like this. Again, brutally honest with yourself, I do not recommend just throwing darts at a board, because there are those massive 1,000%, 2,000% winners that can come in this sector, and there are also massive losers that can come in this sector. You have to be very careful. Final point that I wanted to bring to your attention. So think about this. Private placements. And again, in the future, especially if you like this kind of video, let me know. Give me a thumbs up or share this, these types of educational videos. But private placements are a way that you can invest in some of these smaller companies where you get not only the stock, but you're able to get free warrants. And warrants are similar to options. They give you the right, but not the obligation to buy more shares in the future, which essentially gives you double leverage. It gives you twice as many shares if you're right and the share price goes higher, and there's no additional risk if the share price goes lower because the warrants didn't cost you anything. Okay, so something to consider. I'll do an entire video on private placements in the future because there's a lot to cover just there itself. So in sum, we're talking about precious metals mining equities. Huge potential. But again, look, I have 30% of the average person's portfolio that I think should be dedicated to that. I do have some individuals who I work with who are 100% in the precious metals miners. You have to have a higher risk tolerance. And we have some clients here that have 0% because they don't want that risk. And look, there is nothing wrong with either one of those things. There's one thing that I can say, it's don't try to compare yourself with anyone else. Don't try to say, well, I know someone who's all in the junior miners, or I know someone who has stacks and stacks of physical gold and nothing else. What is it that works for you? That is going to make the final bottom line. Let's talk about this final category, that top of the pyramid, which I think should represent a smaller portion of one's account generally. So we're talking about a trading account. And these are the types of charts. We're looking at the charts for silver here. And this is basically a roadmap. You when you're trading, you have to set out a roadmap, what you think is going to happen, and then you have to constantly reevaluate it every day, every week, and with whatever time frame you are using. So a trading account, the way to think about trading is that you're attempting to profit based on the shorter term swings that happen. Now, me personally, I like trading. I find it an intellectual challenge. I like the idea that I am trying to come up with a high probability of what is going to happen in the future before it's actually known. I like that entire process. That's me. Some people don't like it. Some people can't handle the amount of risk that it brings, and that's okay. It's okay, however you like to do it. I know some people that are 100% in a trading account. So there's an entire spectrum here, but I want to tell you how I consider trading and some ideas for this. The big takeaway is to consider trading. It's different from investing. Trading is an activity. It's something like a business. It's something like that you do day in and day out, and you're attempting to generate income from it. It's different than long-term investing. So it's a process, and you have to identify what time frame are you going to trade. Are you going to be a day trader, which is trading minute by minute, hour by hour, or more of a swing trader or a long-term trader? This is what I generally try to do, where we will take multi-day, multi-week, or even multi-month swings, such as a $1 or $2 higher in silver or a couple dollar drop in silver, and attempt to profit from that. That is the time frame that works for me personally, but you have to look at this very carefully about what time frame you prefer. How much leverage should you use? Should you use unleveraged, leverage ETFs, or options and futures, which are highly leveraged? I'll just tell you from my experience, some of the best trading that I've ever done is in the unleveraged form, especially going back into 2010 and 2011. I made a whole lot of money trading unleveraged silver and comparing the silver miners to the price of silver bullion, day trading, unleveraged. And I think the unleveraged can actually help you look at it more sane. A lot of people get into trouble because they're using way too much leverage, and it makes one act very irrationally, even in a small price movement. Whereas the unleveraged trading, it's much more easy to stay focused on that. So when to cut your losses? You need to define a system and then stick with it. Define a system that you are attempting to implement. Define where you will take a profit, where you will cut a loss, and then stick with it. If you will not stick with your rules, there's no point in even trying, because you'll just be all over the place. Stick with your system, take notes, learn from your system, and then refine it as you progress. Finally, this is so important. I actually think this is the most important part about the business or the activity of trading, is that when you have a profit, crystallize that profit into the physical precious metals or other investments. And what this does, this discipline of literally what do I mean by crystallize? I mean actually withdrawing from your account a portion of the profits. So let's say you have $10,000 in your account and you made $1,000. You had a successful trade and you 10% successful trade. So the 10,000 is now 11,000. What I mean by crystallizing it is withdrawing from the account half of those profits, so $500, so that you are now trading with a $10,500 account. And by doing that, you avoid leveraging up. Because in trading, it's not a question of if you will be wrong, it's a question of when you will be wrong. The successful trader knows that he will eventually be wrong. Just like a restaurant knows that one day they will open the restaurant and no customers will show up on a particular day. And they'll have to take a loss on that day. It's a cost of doing business. Every business has costs associated with it. One of the costs of doing business as a trader is taking small losses from time to time. And the way to avoid them being big losses is to not leverage up. And so take those profits out of the account. Now, again, I'm going to do separate videos. We've just talked about three massive topics here. We've talked about the pyramid, the precious metals pyramid. We have talked about having a core holding, the pros and cons of silver versus gold. We've talked about the precious metals miners, and we've talked about trading. So in the future, what I'm going to do is to do separate videos on each one of these topics, diving into much greater detail. If you like this kind of thing, just let me know. Subscribe to this channel, make sure to do that, and hit the thumbs up button. If you like this sort of educational video, which is different from just the normal type of forecast videos, and we will do those again for sure. But these sort of in-depth videos, if this helped you to understand something about the precious metals, different ways to approach this market, considerations for your own risk versus your own reward, just let me know. I appreciate it. I want to let you know what I do here. So I was talking about the hundreds of clients that we have and have had worked with here. So what I mean by that, if any of this resonates with you and you think, wow, there are a lot of opportunities here. Maybe I'm not properly diversified. Maybe I'm overexposed to one particular gold miner. Maybe I don't have any gold miners and I don't know which ETFs, which funds, which miners to go into. This is what I do. I work with individuals. We have phone conversations just like this. So this is sort of a hypothetical phone call that I would have with a client, but we get much more in depth about your personal situation. That's what we do in the consultations, and we plot out a strategy. We will get things down on paper, and then we make sure that you will stick with that strategy as the market evolves. So you can find more. I will put a link to the consultations if you would like to speak one-on-one. Know that, once again, I take no funds or fees from any of these companies, nothing that we've talked about here. I work entirely for your benefit. If you would like to get further into the exact gold and silver miners like I was talking about, I named one of them that we own here, that Spanish Mountain Gold, which I think has a lot of potential over the long run. It's very volatile over the short run. But if you'd like to see all the research and all the executions and everything that's happening behind the scenes, as well as the analysis that we do on gold, silver, the US stock market, the US dollar, that also includes flash updates going right to your inbox, that service is available to sign up for. It's a premium research service. It's called Precious Metals Intelligence. You can find more about that on the homepage. This is for serious investors who are really looking to understand what's happening here in this market. And I will just tell you that coming up this weekend, we have a special members-only video. We will be looking at the long-term gold and silver forecasts. We will be looking at warning signs for the precious metals. I will tell you this, even though we're in a strong advance right now, there continue to be these warning signs for the precious metals for next year. And if we ignore those, I think we could get clobbered at just the wrong time. And finally, we're going to be covering in this special video the US stock market. Is it near that tipping point yet? There's a lot of new evidence coming out about that. We will take a look at everything from a technical and fundamental standpoint. That's called Precious Metals Intelligence. I do want to thank the people, by the way, who have chosen to donate to this channel. And just to let you know, I really appreciate that. I absolutely do. And the history behind that is just kind of funny. I actually had no intention, I swear this to you, I had no intention of putting that up. I had about 5 people send me emails out of the blue just saying, hey, I appreciate these videos. I'm not ready to work with you personally or sign up for your premium service. And I understand that. They said, I would like to give you a small donation because I appreciate those videos. So that's the only reason why I put that up there. You can find the link if you would care, and just know that I really appreciate the gesture. So we're in an exciting time here in these metals. This should give you the 3 major categories that I believe you should consider. And to be honest, I think it keeps one healthiest. When you're looking at those 3 major categories, the core holding, right? The physical metal, the hard stuff that you can put in your hands. We're talking about that. There are many reasons to have a core holding. However, there are also reasons to own some strong precious metals miners or some of the funds to give you diversification. Again, depending on how much research you are willing to put into it, how much time you're willing to put into it. And finally, I do think there is merit to doing some trading on the side. I think if you blend all these strategies together, it helps to keep you the most straight thinking, the most rational thinking, so that not all of your strategies are aligned only in one direction. I think that's really the best way to approach this market. Thank you, and I will see you next week.